This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft, and thank you all so much for the support and for tuning in. Do me a quick favor. If you like what you hear at Planet MicroCap, please take 2 seconds and give us 5 stars on Spotify or Apple. This helps with the search engine so that more folks can also discover and engage with all things microcap stocks. The Planet MicroCap Showcase Vegas, happening April 30 through May 2nd, 2024 at the Paris Hotel and Casino, is literally around the corner. I mean, almost a week away. Our event brings together the best investors and thought leaders in microcap, quality microcap investing opportunities, and above all else, the most fun and highest return on your time that you could ask for. There's still time to sign up to register to participate. If you'd like to do so, please visit planetmicrocapshowcase.com. See you in Vegas. My guests on the show today are Maj Soueidan, founder and editor, and Jan Svenda, senior equity analyst, both at Geoinvesting and MS MicroCaps. In today's episode, we start off with the weekly breakdown of top gainers and decliners from the Tier 1 Quality Microcap Index and a quick look at TSS Inc., ticker TSSI. Then Maj, Jan, and I spent some time breaking down all the companies that Maj will be doing a Q&A with at the Planet MicroCap Showcase in Las Vegas. This includes Intouch Insight, INX on the Venture, Data Communications Management, DCM on the TSX, Heritage Global, ticker HGBL, Lakeland Industries, ticker LAKE, Crexendo Inc., ticker CXDO, Richardson Electronics, ticker RELL, Altigen Communications, ATGN, and Greystone Logistics, ticker GLGI. We close out by discussing the companies he's also looking at that are not participating on this Tier 1 track. We discussed a number of stocks during our interview today. Maj and Jan also may or may not own companies that comprise their Tier 1 Quality Microcap Index. Please see MS MicroCaps and Geoinvesting for full disclosure. Thank you again for tuning into the Planet MicroCap podcast, and please enjoy my conversation with Maj Soueidan and Jan Svenda. Maj, Jan, what's going on, guys?
Hey there, Bobby.
Hey, Bobby. Just getting ready for your conference coming up soon.
Yeah, same. Just getting everything ready to go here. And, what's really cool about what we're going to be doing here today is we got a couple tasks ahead of us, so I definitely want to get right to it. One is we want to do our weekly review of the MSM Tier 1 Quality Index, which we put out our first episode on that. I think it was last week. I believe it was last week. Yeah, I think it was. And once we quickly go through that, for anybody listening in or watching this on YouTube, Maj is actually going to be hosting his Tier 1 track in Vegas at the Planet MicroCap Showcase, happening April 30 through May 2nd. These presentations, these Q&As are actually going to be happening on May 1st. And there's about 8 companies that you're going to be doing these fireside Q&As with. So we're actually going to be going through each one of those, as well as some other tickers that you're tracking while we're there in Vegas. So, without further ado, Maj, Jan, you guys want to let's real quick go through the weekly results for the quality index, and then we'll go from there.
Sure. Here's our terms and conditions, Bobby, as you know, right?
Thank you.
If you're basically reading this or listening to it, or any way you're consuming the information, you agree with the terms and conditions for MS MicroCaps, and you can read the disclaimer at your own convenience. A real quick again, the MS Cliff Notes is a Substack, and you can go visit that at MS Cliff Notes. And we're basically trying to we launched it 3 months ago or so. We were trying to create the first and only Tier 1 quality universe to hunt for the best smaller cap stocks, and that's what we're doing right now. I think we're up to 88 or 89 stocks, Jan, and
88, 88 right now.
And we continue to increase that. Maybe we add about 4 to 5 a month has been our average right now. What we add, so it's been a real fun experience. For the the returns, the markets were down, last week, and I think when we talked last week, Bobby, we were about 42% or so, or maybe a little over 40%. And we actually maybe 40% or so, and now we're down. We're up to We're up 37.1% on average of all the stocks. The peak return is 85.2%, 85.26. Actually, our index was down 2%, so we must have been around 39.5% or so, I think, last week, Jan. Still beating the major indexes. That's a goal we want to try and do. We're not trying to always be up. We want to see if we can at least do better than the market. Mainly when it's going up, Bobby. We expect when the market really crashes, this index might, because it's got a lot of nano caps in it, might be crushed. So what we're doing right now really is having fun looking at the index now as the market's pulling back to see if we can find any nice stocks to maybe highlight that are going down for the wrong reasons. So we really like these times when the market's going down, and we're noticing that just this index is being a great hunting ground for us to go, like, just picking them, shooting, fish in the barrel, as they say, right?
For sure, no doubt about it.
Yeah, I mean, Maj, you can also already see the LD Micro, and IWC, which is the Russell Microcap. The iShares Microcap ETF, being down 6-7%. Russell 2000 as well, 5%. So that's maybe what we're expecting once the market really starts to decline in our index. But you can see that actually we have a bit less volatility. So we're happy with that as well.
Yeah, there's just a time where if you can't stop it at some point, it just happens. But I think right now we're going into a head fake with the market pullback anyway, personally, although not on market timer. So this is a great time for us to go pick some of the stocks. So if you look at some of the movers, though, lastly, there are still winners when the market's going down. And if you look at here, here's a top 5 gainers of the week for us here. This column here, the first column. BRMF, or BioRem is the name. It's a Canadian-based company, although they do services in the U.S. and Canada.
Also presenting in Vegas.
Also presenting in Vegas, and I think one of your someone's actually doing a fireside chat with them, right, Bob?
That's right, Matthew Martini's doing a fireside Q&A with them.
He beat me to it. Thank you.
No, he's in the afternoon. He did. That is true. Actually, he did beat you to it. I asked you for your list like months ago, and then what do you want from me, man?
No, that's good. That's good. So, I guess like air pollution control service, services what these guys do, and we actually had them on Geo on a fireside chat a few weeks ago, and then they had great earnings. I think it was last week. And we had them on the next day for an update call right away after that. So, but we really like this company. There will be some volatility in the numbers as they go through their big projects. They have their lead times and their backlogs got a little longer. But if you want to, I think, stick with this thing long term, it's gonna be a really interesting story. I encourage you if you can get some one-on-one action with the CEO at the event. I really encourage you to do that or watch his presentation. Really impressed by what they're doing there. They're actually wrapping in now some recurring revenue services too, slowly, which will maybe help over time reduce lumpiness in the business and the project business.
Very cool. Hey, real quick, for all 5 of these names, are you a shareholder? You and Svan and Jan?
I'm a shareholder in BRMF, TSSI, ADF. I'm not sure. I might own a little bit of it, Bobby, but I can't quite recall right now.
Man,
I'm very mad that I don't own a lot of it. I can tell you that.
That stock had a massive run. Look at that.
Yeah, crazy. But I don't think it's too late though, personally. And I'd like to maybe, if I had some buying power, I'd still probably buy it here. It's one of those situations where it's always been trading like a value trap kind of valuation. And it's really they're benefiting from automation in their product lines, and their manufacturing lines, and the infrastructure bill coming out. One thing I wanted to notice here too, Bobby, is that, again, as I pointed out the last conference we did, these subsectors is the industry tags. We just pull these out of the audience screener that we use. As you can see in microcap land, that's not right. I mean, when you're looking at, and we're already going through our index to make better tags, but in the meantime, we're just using this. So, BRMF says environmental facilities and services. What does that mean, right? So our tag's going to say air pollution control service. It's more specific. TSSI, diversified support services. It's really data center integration. So the
makes sense,
about our index is we're just going to take very, a lot of care to make your job easier when you're going through the index. What these guys really do. If you look at all these here, I'm really excited about the TSSI, Bobby, which has been going for a long time. They had one multi-bagger run, then a round trip. Now that's come back up again. It's around 70, I think, almost 80 cents right now. And these guys, and this is a classic case of InfoOrb, and we're going to get into it later. But this was a misunderstood company, and I think people are trying to find it now, which is interesting. RCAT, I think, is drones. Although I don't really love the company that much personally, but I believe they make drone equipment. So, as we know what's going on right now in the Middle East conflict with Iran and their drone attack, I think that brought that maybe in light a little bit.
For sure. Hey, Jan, real quick, do you own any of these?
Yeah, for sure. BioRAM, TSSI, and ADFGAF, the AD group.
Cool. And that's ADF is like metal fabrication services would be a better terminology for that, Bobby.
Got it.
All right, so move on to the bottom guys here. So I think CMTL might have been in the bottom last week too, Jan. I don't know.
I think so. Yeah, I think he's getting crushed. Yeah,
that's the one that really fooled us. And I don't own any stock. And I own off this list here. I own MITK. Bobby.
For sure. So just for those who are listening, and the list is for the bottom 5 this week, whereas CMTL, CSPI, MITK, HROW, and HMDPF. So you just are a shareholder in MITK.
Yeah.
Got it.
I own Hammond, which is the last one, HMDPF.
Oh, yeah. Thank you for making my day. I sold a 40.
Maj is saying that again for those who are listening and not watching on YouTube.
You've been very quiet about that, Jan.
2 percentage change.
Yeah, it's an okay return. No, but I mean, to be honest, with the Cliff Notes, I mean, it's smaller positions. So unfortunately, as always, you try to measure it right, but it's hard. It's hard to stick with large positions and things like that. So to be honest, yes, but
it is our top performer in the index, by the way, and it's Canadian, which I love because everyone makes fun of Canadian stocks. I don't want to invest in Canada, and ironically speaking,
who makes fun of Canadian stocks now? I feel like if you're in microcaps, you should be shunned if you're going to be a hater on Canadian microcaps, or at least non-resource.
They may be better, man. I know, and I know. Paul doesn't want anyone knowing that because it's gonna get into his hunting ground. But...
so this is Paul telling you hey, no, just keep hating on Canadian microcaps, please. No, by all means. They suck. They're terrible, especially this one.
Nothing to see here. Just leave it be.
It doesn't matter. I mean, you could beat that drum, and it's gonna take decades for people to figure it out and believe it. So in this little area here, so I do own MITK. That was down because these guys make identification solutions using AI. We'll call it AI now. They never called it AI till now for identifying checks and for customers to make sure there's no fraud, spoofing of other people calling in or writing someone else's check, all these kind of things. So they basically verifying signatures. I don't know. And they had some earnings. I think it was it this week or last week? It was actually this week. So I don't know why it was down last week. But this is including this week. That's right. So yeah. So the earnings missed estimates. This is an interesting case again of when microcap investors just get too jumpy on things. So they missed the quarter estimates. It was Q1 for them, but their guidance was in line. So it's just the numbers are just gonna fall differently over the course of the year. You got these short-term, I don't know, investors or maybe even bots just selling the information and crushing the stock. The stock had just hit a 15-week high. After battling back to get there, and now all of a sudden it's down 20% because of the quarter into a pretty tough market anyway. So again, this is one of those situations where we're looking at it right now, maybe for the buy and pull back scenario, because combined with people reacting maybe to the stock, to the earnings miss, and also bad market conditions together maybe creates an opportunity to take a look at it. CMTL, still trying to go through their debt refinancing issues, which is getting, the longer this goes without being resolved, the harder it's going to be for them to do this, I think, in a way that's accretive to shareholders. They have their debt coming due, I think, in the third quarter this year. Otherwise, other than that, it's a great story. Aside the CEO just being terminated for, they didn't say what kind of reasons it was for, but it certainly was. It seemed like there might have been some malfeasance going on in the workplace from the tone of why he was let go. But before he left, he had done a pretty decent job of securing better types of contracts, long-term contracts, in higher growth markets. It's a larger company, but so if they can resolve their debt issues without too much dilution, this might be interesting. The stock I think was almost around 12.50 not too long ago. Now it's sitting at about $3 or so, I think, all because of the debt thing. So I think that's an interesting one to look at upon the resolution of them solving their capital structure issues there. So that's all I want to really talk about on this. I mean, there's a lot of hype on CSPI because of their new AI kind of software solution, I guess, in cybersecurity. It used to be an old IT. It's legacy business. Is old IT consulting using third-party solutions. Now it's a little sexier story. One thing I have an issue have had with these guys is that when they report their earnings, they report GAAP earnings. They don't necessarily always break out their non-GAAP numbers, which and I think the last 2 quarters would have been maybe worse than the GAAP. I know one of the last 2 at least was. So I wish we were a little more transparent with that. But anyways, not knocking the company at all. It could be once they're really talking about cybersecurity business now. That they think is that we haven't really seen a lot of revenue come from that yet. But I'm assuming once it does, it'll be a lot high margin revenue. And maybe it corrects the past issues where the company has had a hard time consistently growing the revenue with legacy business. HRO is a pharmaceutical company that that's basically concentrated on eye care. I guess we added it to the index. We didn't really notice all the negative short reports out there on the company, and it was probably a bad idea to maybe add it based on that. But if you look at the estimates, because this stock has not done well for us in the index, by the way. If you look at the estimates, they're crazy. So if you're willing to dig deep into it and want to basically bet against short sellers, the stock is worth probably multiples of where it's at now if they hit those earnings estimates. But I don't think Jan and I are going to really comment on. We haven't looked deep enough into the short sellers' arguments to say that they're wrong. So, but just beware of that kind of caveat there if you're looking at that stock.
Got it. And that was for HRW or OW.
Yeah, HRW. Okay. Let's move on here. So I want to circle back to TSSI again here, where this is Article 84. I think the stock was like around 50 cents when we had highlighted it. It was actually, I think, maybe around 25, 30 cents not too long ago. And this is a really interesting case where it's taken forever for investors. This is on the OTC, and I do own the stock, Bobby. I've owned it for a long time. To really put together the connection between their role in AI and data centers. And this is one of those really subtle situations where if you kind of look at the qualitative of the story and really monitored the way management was speaking and portraying their story to investors, they were getting a little more confident in the way they were doing it. So they have 2 sides of the business where they have their kind of service maintenance of facilities and services. And then they have their integration business where they actually build things within their facility and then deliver that to their customers. So a lot of what they do, and maybe I think most of it is really or a lot has been in the data center business. So they would make a data center, like a rack in their facility and then send it to the customer. And they get their orders from OEMs. and they haven't really disclosed who their largest OEM is, which is really well over 80% of their business. We all think it's Dell, and that being the case, so that so it looks like a very concentrated business in terms of customer, but the OEM is basically just a conduit to other customers. So it's really not diversified if you look at it that way. In terms of the OEM's customers are all using TSSI solutions, and that I would think it's a sticky solution. So the biggest issue we've had here with this company over the years is that they weren't able to scale their business. And I never knew why. I mean, the previous year did a good job of bringing this company, out of almost on the brink of bankruptcy, shedding assets to a point where it could survive and live, and get to break even their profitable operations here and there, stabilize revenue. COVID came along, screwed up like everything in the supply chain. So I don't think that they needed someone new to really take the business to the next level. Now it's stabilized. Let's take it to the next level and scale the business. So what you start to learn here is that the new CEO, Daryl, has really taken now the business and put it in a situation very quickly. He came in about 2 years ago to where now the business can scale. And that's really important because when you're looking into AI and data centers, these OEMs and the customers, they want deployment quickly and fast, right? So those companies that can scale and do that quickly are the ones that are going to get the business from the OEMs. So now when you listen to the last conference call, which was the Q4 conference call, a couple weeks ago, Daryl said in the transcript, if you were listening to it or went to read it, that they now are able to basically scale that part of the business 10 times more from where it used to be. That's really good. And what was even more important in that script, and this is how we listen to calls, Bobby, is that the deployment time has significantly decreased, from months to weeks. So what you start to learn here is that all in all, they've always been a pretty decent, a quality integrator. Now they can do it quickly and scale, and I think that their OEMs are going to appreciate that and give them more business. But it was interesting, but the whole I'm not in this AI hype. If you don't believe AI is here to stay and is important, then you're living under a rock. And this isn't, so we're not playing the hype. We're looking for real companies, in this AI area where their valuations haven't been kind of rewarded yet for being involved in legitimate ways. And TSI was one. You look at the conference call transcript, this one and previous ones, you just saw the very subtle hints that they're getting into this whole, AI kind of area. And the last call was riddled with it. And we just thought it would be a matter of time before investors would start seeing. They had a great quarter, by the way, profitable quarter. But then when you look at it some more, you find out that I was reading the 10K, and another big problem with TSI was being able to report profitability on a consistent basis in the past. They would have a profitable quarter here and there. So we look for subtle changes in their filings to see, okay, maybe because give us some hints if that's going to get better or not. And we found this passage here that was not in any other previous filings. We believe that we will continue to be profitable on a quarterly and annual basis in 2024 and beyond. It's a pretty bold statement from a small company. In the prior filings, they might have said we expect to be profitable on an annual basis, right? They never really distilled down to quarterly. So that tells you they're getting a little more swagger in their approach here. So we just found it a couple of days ago sitting in their 10K.
Well, it's one thing to have swagger; it's another thing to deliver on those numbers, right?
Yeah, now they got to deliver on it, and and I don't think people are going to believe it. I mean, we're not going to believe it until they do it, obviously, because of past history. But it was, the CEO, I think, or maybe through his wife, did buy some stock after earnings report came out, maybe 10,000 shares. So that was good that they did that right away. We still think revenue for this company will be lumpy. I'm not going to get into the whole business model, but there's a piece of the business that has lumpy revenue, low margins, but right to the bottom line, basically to satisfy the needs of their OEM customer, which is really good because it basically is allowing their OEM customer to provide services to their end customers that they couldn't do without TSSI. So, which is really good. And then it brings TSSI closer to those customers too, the way that, so and that can be beneficial long term.
Very cool.
So it's not all data center work too. It's usually a lot of it's not data center work. And they just launched a new data center service, which is I think called some data centers on a move or something to that effect. So what you're going to see now, because this AI transformation is happening so quick, there's going the deployment of data centers is going to have to be quicker, and companies are going to have choices of how to do that, and TSI has a service now to help them make those decisions quicker and have those deployments quicker. And they just launched that, so that's going to be a very nice service to see how that scales over time. In order for this company really to start really getting the high valuation multiples, they're going to have to really start proving to investors they can do consistency and really speed up the integration service. They've had a very steady integration service, but it hasn't really grown much. But so that's the next evolution here. So we'll see what happens from now if it can keep on going. But I would expect the growth to really start accelerating maybe in the third or fourth quarter this year. Maybe some lumpiness until then. And one thing I wanted to give some props out to is it here, Jan? There was a Substack, right?
Yeah, I mean, like you write about it in the Substack article, you mean, or what?
Yeah, where was it? Yeah, there was
well, it's there. Here.
Oh, here it is, right here. I'm sorry. Yeah. So basically, props out the multi-bagger monitor. I think he has a new Substack. May want to reach out to him, Bobby. I like the way he's a couple good ideas. He's had on the Substack already, and he kind of lashed onto this I think this week, and his article I think moved the stock pretty tremendously. I don't think it was a coincidence when he put his article out, the stock went up. So it was good to see. He did a good job writing the article. So props out to him, multi-bagger monitor on Substack. We just think it'll be a matter of time before other smart investors find the company. And here's a chart of the stock here over the last I guess month here, or yeah.
Yeah, and 38% up since we added, or roughly speaking, 40%.
Yeah, cool. All right, and so we have a new addition. I added a new cliff note this month, Bobby. Cliff number 88. This is a boring $1 billion transportation equipment company. This actually is it was a small cap, not a micro cap. And it's one of those boring companies that has a PE of 10, doing $1 billion over in revenue. And our thesis here is that we agree with some activists that are out there talking about how they believe that there's a lot more margin expansion that could occur at the company if they were to implement some efficiencies, and that would result in the stock more than doubling. And we agree with that if they can do that. Then we're looking at industry peers to see where the industry peers are at. If you look at the peers, you will see that there's a lot of expansion margin expansion available. This activist also believes that the company may be an acquisition target, and so there's upside there too. I think of about 30% or so.
Are you allowed to mention the name, or you have to subscribe to MS Cliff Notes?
The thing is, we're too early in the DD, and I don't
gotcha. Okay, fair enough.
Doing that yet until I really dug into it. But I would disclose it if I was, if I at least did a little more work into it.
You're teasing everybody here.
A little yeah.
Teasing me.
But we'll talk about it. We think they can do $6 a share in earnings. So you put a PE of 15 on. I mean, I don't know where it's at now. But I think the stock right now is $50 maybe on. Is it $50, I think? Yeah. So just a PE of 10 on that gets you to $60. Just holding the PE, that's about 25% growth. But this is an example of a cliff note, though, how we write them, though. So we're actually experimenting with a shorter cliff note. We come in here and we just did this elevator pitch, trying to basically consume everything in a paragraph or so. And within this paragraph, we talk about the reasons we like it, and then we get into evaluation. It's really quick. Now, some of our other cliff notes are more like a tiny paragraph of what the company does, and then a list, like a 10-point list of why we like the company. They will all include caveats and extra research tasks that we have to do. But so we're going to see what our subscriber base likes more, if they like this elevator pitch idea more, or if they like the list of reasons.
I like both.
Yeah, the mixing is pretty good, I think.
But yeah, like some of them,
Yeah.
some of it, I mean, you're the creator, whatever flows, whatever feels right,
Problem solved.
Yeah, that's it. All right, let's move. Let me set you up now for Vegas and the companies that you're going to be doing the fireside Q&As with, just so I can have my notes up here.
Sure.
I probably should. You're going to be doing on your top tier Q&A track, you're going to be featuring, you already have Altigen up here, but also Intouch Insight, INX on the venture, INX.SV, Data Communications Management, DCM.TO on the QX, DCM on the TSX, Heritage Global, HGBL, Lakeland Industries, LAKE, Crexendo, CXDO, Richardson Electronics, RELL, and the first one that you got, or actually also Altigen Communications, ATGN, and then also Greystone Logistics, GLGI. So first one up, you got Altigen. I figured let's just do like a very quick, 2 to 3 minutes on each, why it's interesting to you and why you wanted to do the Q&A with them for the fireside this year, and then we'll roll through all of them. I mean, we got 8 names.
Sure.
Yeah.
And let me be specific too. I'm not saying these are. You have companies come to your conference, Bobby, right? We're trying to figure out which ones that we want to interview here. So
sure.
Some may or may not be timely. I'm not necessarily saying that's always the case, but they might be timely. But we're trying to figure out which ones might be timely after interviewing them in these things. And some of these have been on your previous podcast with our tiered tracks last year. So ATGN was one of these. They were on last year too. And the stock, I think, has done pretty good since then. I think it was maybe low 50-cent area. Now it's, or maybe the high 40s. Now I think it's 75 or so. So my biggest thing here with this cloud communication company, really, and the biggest kind of obstacle to them holding any kind of price gains they had at one point was the inability for the company to roll out its new software suite, so that its biggest customer, Fiserv, can basically introduce that suite of products to its banking customers. That's the number one. The number two thing is that Altigen also has legacy customers that it has in its own direct selling kind of way, where they've been waiting for upgrades and they haven't been able to give them the upgrades yet. And then they have this other growth area where they need resellers basically start offering Altigen's products to enterprise customers or SBMs that use Microsoft Teams. So that basically the product really hasn't been ready for prime time for that. Our goal on this conference is going to see, okay, are they there yet? Now, the CEO, as well as the Joe Hamblin, who's come back to the company now, which is a big positive sign, but which we'll talk about at the conference and why Joe came back. They said on an update call with us at Geo that they've arrived. They think that the product is ready to launch. So we want to understand, what does that really mean and how does that scale over time? Obviously it'll probably be a slow launch and get better, but it's been a few weeks since we interviewed the company, and it'll be good to see if that optimism still holds from that conversation we had with them. So that's the main really goal here. Where are they in that? And then they have a new contract, a new IT contract with I think the Department of Transportation of Connecticut, which is a fairly large contract, and we want to kind of see how that is progressing also. So that's really the thing there, Bobby.
Cool. That's ATGN. Are you currently a shareholder?
I am, yes.
Nice.
I think since 2000,
Jan?
Q1 of 2015.
I'm not.
Sorry, Jan, you're going to be on screen. I got to ask you too, you know what I'm saying?
Yeah.
Of course.
So
All right,
let's
next.
go to the next one. Is that right? CXDO. Yeah, CXDO, also a cloud communication company. They were also on our on the tier 1 track last year, Bobby. I think the stock is up since then too.
Yep.
I don't know if it was around high ones at that time, but the stock got as high as 7 recently. When we started having that big push in the market at the end of last year, settled back here now in the low 4s. This is a story where we're just waiting, and people are waiting to see if the company can grow organically. They made a few acquisitions, which was helping growth, but we weren't really seeing organic growth. Now we've seen some for 2 or 3 quarters, and we want to make sure it continues. More importantly, they've been growing profitably. My main goal here really is, and I want to say this too, by the way, look at ATGN. One thing I want to show you here, this is ATGN, and the sources that we use sometimes to track these earnings, in sales history. The left is sales, the right is the earnings per share. You can see it's incomplete sometimes. So another thing we're going to be solving at MS MicroCaps and MS Cliff Notes is these data issues. So, but we have these here for reference in case you want to look at them in the history.
Yeah, for ATGN, it's really ridiculous because it goes only into 2022. So
yeah,
there are more examples. Yeah.
So CXDO has the blue is the estimate. The blue is the estimates. The white has already happened. So my goal here really is, okay, so CXDO made this really nice move, but when you look at the estimates, there's no growth here, right, on the earnings per share numbers. There's some growth on revenue coming up. So my main goal I'm going to have at this conference really is to ask Doug Gaylor, hey man, what do you have in store for really increasing growth, or are these estimates too low? My assumption will be they'll be looking for more acquisitions, which they kind of hinted about on their last quarter report. So, but you can see that when you look at this, that to tell you the truth though, there was about, I got to go back and check this stuff out, Jan, but I think that this 24 cents is too high. I don't. There should the non-GAAP number was lower, I believe. So
I can double check quickly if we wrote about it. Yeah.
Yeah, I think I should check it out real quick. Yeah, so I think in 2023 they might have actually done maybe 18 cents on an adjusted basis, maybe, or maybe closer to 20. But they're growing. And now the thing is, what kind of multiple do you put on that, Bobby? Right? So you put 20 multiple, it's $4. So I would think at these levels, the stock is maybe fairish. But if they can beat these growth estimates, they make an acquisition, it can go higher. What's the price of sales in this, Jan? Do you have that too?
Yeah. I can check that real quick, but the EPS was like was 16.
16, okay. So we
on our end, yeah.
So we have good growth coming still in 24 on a non-GAAP base, which is nice. So maybe you could get a PE of 30 or so. But we still have to contend with 25. So I mean, they're going to make an acquisition before 25. So these guys can probably sustain a 25-30% growth rate EPS, I bet you, over the long term with the acquisition opportunities. So that's what we want to get into.
Yeah, and the EV sales is 2 right now, two times. So I mean, yeah, it's kind of getting there, but
I think 2 to 4 is a good range to be in. So there is probably, if they keep growing their revenue and earnings, it might trade more in the EV to sales than the PE. So maybe we get to maybe another double from here potentially. But that's going to be what we're going to dig into, Bobby, on CXDO. We go to DCM.
Oh, by the way, CXDO, I forgot to ask shareholder.
I am, yes.
Yeah, I'm painful as well, painfully long.
Painfully long if you held in the last year at our conference.
Yeah, dude, but more than that, longer than that, Bobby. We're longer than that.
Okay, all right, all right. Okay.
This stock has been a tough roller coaster. So DCM, they're going through a restructuring, and we think that restructuring will that's why you see the 2024 earnings per share numbers kind of, actually, they might have went up a little bit. That's nice to see. Interesting. Yeah. So, but the 25 is the year of that these their restructuring is going to start playing well for these guys. We just want to kind of see how the integration of the acquisition of Donnelly Canada is going with these, and continue to see if they paid down some debt that they took on with the acquisition by selling some assets of the acquired company, which is good to see. And the story here again, really quickly, is just the company, the CEO is they acquired Donnelly Canada, and the goal really here is to bring those margins up to where the parent company was at. And why we think we can do that because the CEO had done that with the legacy business before. So he already did the same plan, restructure to expand margins with the current company before the acquisition. He's just doing the same thing with the acquired company, which is the same exact industry. So they do printing and well, that's what he called printing and advertising services. For companies, a lot of financial institutions, for example. The promo material you might see like at a bank, the poster is what kind of what these guys can do. But what they've done really is taken made it into a technology company as opposed to like a print first company. And I'm not going to get into it here, but that's what they've done, and we've gone over that before in last year's tier one, and we've written some articles on it too here at Geo actually. But this is also in our index. That's what I wanted to show you too, Bobby. I think is that if we have a star next to the symbol, that means it's in our index. So DCM was put in our index. Hold on a second. ATGN 60 or not yet. But you figure the stock right now is selling at, I don't know, at 225 US. I don't know, where is it Canadian now? I am thinking maybe 3-ish. Is it DCM.TO?
Yeah, I'm checking 310.
310. So what kind of P this gonna get? I mean, you put a PE 10 in this thing. I mean, I think that's very reasonable. I've seen some of the PE 15 industry, but if you're a leader at 10 to 15, this could be $8 stock in a couple of years, Canadian, and it's 3 now. So 25, I think, is the year for them. But I want to own it before 25. So I do own it, by the way, Bobby, too.
Jan,
you own this, Jan?
Yeah, I don't anymore.
Okay. INX.V, Intouch Insight, Customer Experience Services. They were on the tier track last year too, Bobby. And I think we've interviewed even before that. We've had them on your podcast as well as live at your conferences. And really, they just made it a transformational acquisition. I think I used the word transformational. I promise I wouldn't use that word, but I did. But since the conference and more the brand merchandising part of the business, we want to understand how that's going, what it means for the company, kind of get a read in the economy. I mean, a lot of what they do is, for retailers and brick and mortar type of, service companies like restaurants. And we want to understand how they're spending money on customer experience with a maybe uncertain economy, or if that's gotten better. From what we read some stats that the customer experience budgets are loosening up now, and it might be like the -- area where marketers are spending their time on. So I'm going to want to talk about that. But they had a great year. A great end of the year last year because they had the acquisition here, 9 million in revenue versus 5.5 million. They were actually profitable this year, but I don't know if I expect that on an ongoing basis. I think these guys want to run like a break-even business as they scale, because they have a software piece of business too. But a big part of what Cameron, CEO, has talked about in the past is growing the company without diluting the shareholders. And I want to make sure that story is still intact. I believe it still is. He's always been pretty close to the vest. We didn't expect profitability this year, and he came in with some profitability. And again, there might be some tax gains in here, 2% stuff. I don't know. So. but we got to check that out. But they were profitable this year. So that shows they can do it, which is nice. And as their software services become a bigger part of the company, that should get better. But the new company they bought is going to be give them opportunity to have larger revenue type of opportunities. Maybe lower margins, but lower margins, a lot larger revenue base.
Cheryl, did you discuss?
I am a shareholder in Intouch, yes.
Cool.
Yeah, I have also a very small position.
All right. HGBL, Heritage Global. I don't think we're a shareholder in that right now. This was also on your, or maybe you are, Jan?
Nope.
Okay. I'll have to double check on that though. I might own a small amount, Robert, but I don't think I do right now. We want to get we want to talk to Russ and see how he feels about the business outlook for the company. These guys will benefit from a slower economy and bankruptcies and these things. We want to get rid on that. So we got some nice growth on an annual basis coming in 2025. 2024 is a little sporadic, and you're going to see that because they have, their asset liquidation business can be lumpy, and it's just the nature of the game. If you're going to basically invest in HGBL, you guys are looking at it on an annual, I think, on a long-term basis. And I think, Russ is very good at telling the investor that's how you should look at the company. So we just like to see how things are going, and he's always fun to interview. And really it's to get his industry's perspective. Look, if the economy is getting better, what does it mean? I don't know. It means is it? I think Russ has to. Ross. I want to understand, like, how to take the narrative away from the economy, with or without a bad economy. What does this business look like? Because I think if you stick with a narrative of it's only in a bad economy, then you have the cyclicality to it, right? So really, is it going to be able to grow just long term through any type of kind of environment that we're in? I think his answer will be yes, but I like to understand what that plan might be. Then we have Lake, which is in the index, and I do own some stock. I do own some Lake and Lake. Really excited to have these guys come. Everyone knows Lake from the COVID days. Hazmat suits, gloves, masks. And that's a lot of what they do. This company has a history of basically being hot when you have, these pandemics or similar type of things. SARS virus back in the day. And that's what it's known as. And the new management now is really trying to reshape the company into entering markets, personal protection equipment markets that are not dependent just on, these kind of things. And a lot of what they're doing is basically taking target markets. Like right now, they're in the fire market, apparel market in the fire, from boots to hats to the clothing, and really acquiring small, operators in that area, and to start getting more stable revenue. So right now they're just looking at certain industries to do that in. So a big part of our thing here was that the analyst estimates out there are really underrepresenting what we think they're going to be. So the company put out a presentation when we found the stock and put it on the Cliff Notes, and the objectives, I'm not calling it guidance, but objectives they gave in the presentation led us to get numbers which were much bigger here than the analysts are at here. And so, for example, analysts are having a $1.97 estimate in 2026, and $1.53 in revenue. If you look at the company's current guidance right now, they gave them after their Q4, it's already basically above the revenue estimates of 2026. So if you look at their 2025 revenue guidance, I think the revenue guidance for 2025 is $140 million to $150 million, and that's not including the last acquisition they just closed, which is probably a quarter's worth of revenue. So they're already going to be in 25, if they hit their target, above 26 estimates that the analysts have. That's how we like to use analyst estimates, by the way, Bobby, sometimes, just seeing if they're a little off the mark there. And but the bigger driver here of the performance, we think, is going to come from the EBITDA margins. The company has a target to get in the high teen EBITDA margins, and the analysts when we found a stock, we're looking at only 12% EBITDA margins out of 26. So you put it all together, and you look at the company's goals, we get like earnings per share estimates go exceeding 250. Stock right now is selling, I think, at 16-ish. So there's a lot of, and we think this looking at a 20 to 25 PE at some point. Once it gets more of a stable revenue and stable earnings per share growth going. So, and a lot of it's so yeah, we're just going to base the main goal here talking to this. I think CFO is going to be there, right, Bobby? And
yeah, I think Roger. Yeah, you're gonna.
Roger, yeah.
Roger. Yeah.
And I've already talked to him a few times on Geo, and we're gonna talk about really where they are in that meeting the objectives that they kind of the solid objectives they've set in that presentation, and what are the things they got to continue to keep doing to meet those objectives. And I do own like GLGI plastic pallet. Really this
I don't, yeah, for the reference.
You own it?
Oh no, I don't.
Okay, I own this. I own a little bit of this one, Bobby, I believe. So I have for some time actually. I think you had him on your podcast, which was nice to see. I think, right? That's his inaugural appearance was on your podcast.
Greystone, yeah, that was about a year ago. Yeah, Warren, man. Hey, he's busy guy, dude. He's always, I mean, he's the epitome of owner operator,
So the two things I want to get here out of this are
full disclosure, not a shareholder in any of the names that have been mentioned. So
we gotta change that, Robert. We gotta build your future for your family.
That's for sure. That's for sure.
The two things I want to get out of this really are, they still have a lot of customer concentration. And I think maybe up to 70-80%. I want to understand, and that's been like that since I've been following stores since 2014. There's always been this narrative that they want to reduce that. We just want to understand why they haven't been able to. I guess there is this thing where plastic pallets might be more expensive up front than like wood pallets. Maybe that's the issue they're having, but over time it's less expensive. You would think with this ESG environment now that plastic pallets will be better than, will be really good, because they're recyclable too. And then the other thing, I think they made an acquisition. I don't know, Bobby, when you interviewed him, had he made that acquisition yet? I think he did, right?
I do not believe so.
Not yet. Okay, so then basically,
I'll double.
And I think part of that was that acquisition was hopefully to give them some new products to expand our product line, as well as to maybe help them get out of the customer concentration kind of issue. And I'm wondering what it's going to take for that to kind of take effect here too. And then we move on to RELL as a company I used to own. I don't right now.
Real quick on GLGI, I interviewed him. Well, actually, I just put out another. I put out this one April 10, 2023. So I don't think the acquisition happened yet.
Okay, maybe not.
Right?
I'd have to go back and check, but it might have been around that time, right after. Can't remember off the top of my head. But on RELL, these guys have a few divisions, and they got exposure to semiconductors. They also have a kind of a business that targets the clean energy, transportation, basically better power management type of solutions than what's out there right now. There is some cyclicality to the business because they have exposure to semiconductors. So the stock has been a wild ride from like $7 to $28. We're lucky to get out of it near the top. Now it's come back down again to I guess where it's at now. I don't know, 9-10 area.
10-50, yeah.
And we want to see if the cycle is back up now soon. So you figure, that you can see the 2024 was the down year here for them, after a pretty decent 2022 and 23, but you can see in the Q4 of 23 is when it started to get bad for them. So we want to see if that, when the recovery is going to occur for them. So I don't own it right now, but I am interested in watching the recovery and kind of if you want to follow this company and their chip business, you want to follow Lam Research, LRCX. That's one of their biggest customers. So if you follow that company and they start doing really well, and you read and you pay attention to their guidance, that'll give you an idea maybe how that part of the business will be doing for RELL, which is a big part of the business.
Shareholder?
I am not in RELL, no.
Jan?
Yeah, no, I'm not either. I'm not either, but I think it's really the turbine business is what gets me interested with the RELL for sure in the long term. And there are a bunch of like products that could be really blowout. So I'm actually like really interested in the stock.
And their power solutions extend the life of the batteries that are used, and they're a much more I think environmental friendly solution too. So that's the thing.
I think that's all eight, right?
What's that?
I think that's all eight, right, Maj?
Yep, that's it.
Cool. All right, very cool. So, and then let me set you up here. So, you have a full list of that includes names. So, if you're not watching this on YouTube, this next slide is some of the names that are going to be presenting in Vegas that I guess Maj, you're interested in tracking. And yeah,
right. I would basically maybe meet, and I've already followed a lot of them, maybe meet them for the first time, or just do one. If I was an investor going to this conference, aside from the ones I basically just went over, I'd be really interested in. Yeah, I went through all your list, Bobby, of companies that might be in the tier 1 sphere or maybe getting there.
The orbit.
And this might not be all of them, of course, but these are the ones that if I would recommend investors take a look at and meet.
Very cool. Well, let me just name some of them off so that they get that recognition. It's a BioRem, of course, we talked about them earlier. Issuer Direct, Mama's Creations, Live World, Bioscient, Creative Realities, Galaxy Gaming, NextGel, Prophase, OneSoft Solutions, and Alico. Full disclosure, not a shareholder. Do you own any of the names listed here?
I own BioRem, BRM.V. And that's it right now. NXGL is in the Cliff, it's in the Cliff Note Index actually. As is, by the way, as there's no star in it, but as BRM is also in the Cliff Note Index.
Got it.
It's the BRMF that we talked about in the beginning. And apart from what I already mentioned, NextGel I own, and that's it. For me.
Of these, Bobby, I would really, my favorites probably are, I really, obviously I own BRM, so I like that one. ISDR, I'd be really interested. The stock has come down pretty hard from its heights. I'd be really interested in seeing if that's giving us an opportunity. The Mama turnaround's been pretty awesome from the new CEO there. Live World, I think it's is it an advertising platform or not?
Yeah.
This is interesting. Just sitting there, they have a decent amount of cash in the balance sheet. It's just one of those sleepy companies. I think it's selling near its book value around it. Right around profitability. One of those, interesting kind of just keeps growing really slowly. So I kind of want to understand if they can break out of that, because that's selling at a valuation, from a book value point of view, even though maybe not earnings, that might be attractive if they can start growing. So I would definitely want to meet these guys. I don't know if I am or not, Bobby. And I think I wanted to request that one, right?
Live World, I think you are.
You got me on that one, right? Yeah.
I get you on as many as you want.
Yeah. And then XGL has really got an interesting situation where they make gel pads, gel solutions for medical devices and pads and stuff. And they have a big contract with a pharma company, which potentially could propel earnings to like ridiculous numbers. But there's this delay in getting that out. And I would like to, but if they can do it, the numbers are ridiculous. Stock's like, I think, around the low 2s right now. But I want to understand more about why that contract hasn't really materialized just yet. Why is a pharma company not deploying that product yet. So that's really it there, man.
All right. Well, Maj, Jan, with that, thank you so much for our weekly wrap, doing a whole preview on Vegas for both the fireside chats and for the stocks to watch. So, with that, where can folks go and subscribe to MS MicroCaps as well as to GeoInvesting?
Sure. So MS MicroCaps, you can go to MS Cliff Notes on our Substack. Again, the M stands for momentum and price. S stands for sustainability of business, and obviously M for microcaps, and our Cliff Notes. And so you can see us there. We also have a Twitter handle, and you can also follow me personally at Maj Geoinvesting. Jan has his Twitter handle.
Yeah, just my name, Jan Svenda. Yeah.
Jan as Venda, SVENDA. Geo, you can follow us at our Twitter handle at Geoinvesting or Geoinvesting.com. You can join our free email list and get our newsletter every week and every month. And you can also subscribe to our premium services, where we have a host of things that videos, research reports, monthly forums, a pretty active platform on the microcap space.
Very cool.
Yeah.
Very cool. All right, guys. Well, thank you so much. Good luck. Stay safe. And Maj, I'll see you. I'll see you guys both next week, I'm sure, at some point. But if not, I will see you in Vegas.
Excellent, man. Thanks,
right.
guys.
Thanks.
Thank you.
This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.